So, if you look at the dollar right there, like here's your decline, right? And this dollar has just been sideways all year. So it is basically in 100 to 105 kind of range. Is where the dollar has been trading. So I don't have any kind of a big concern about um, a dollar being like a big threat to the market or something. That's just no. I mean, we can do what we can do. We can do gold here. Say we can do GLD. Here's gold. Let's change the color to pink. So remember, gold has was sideways for almost 3 years, right? And this is where the gold made a divergence right there with the US dollar. And then from here, the gold took off. And then what dollar did pretty much stayed down, like sideways, you know? So now this move from this 100 low on the dollar all the way back here to 106 is where the decline right there of uh, of gold. Now some of these correlations are very good. Now look at this. Look at the high of the dollar. Look at this high of the gold. Sorry, the the peak of gold, and look at this US dollar. Look at this. You know, it's just like if you sit and kind of like look some of these commodities and sectors, and compare them side by side, some of these divergences are just can literally give you the top, you know. I mean, is where the I'll show you the VIX as well with an S&P. Is this like here the dollar tops right there back in what 2022? Look where the gold just hit the right there, and then it just backs off. So if we do, I mean, I can put anything here, but I'm just looking at dollar. I mean, I have what is the forex? I have that here forex. I watch. So dollar has strength. Okay. You see, now if you look at the daily RRG, okay, you can see that pretty much everything Euro, Swiss, British, Chinese yuan, right? They're all going toward this lagging quadrant. Australian, New Zealand, and here's your Japanese yen. So there's nothing here. It's just because of the dollar strength. Dollar strength will dominate the forex market. Okay. I've traded currencies for 8 years. I know pretty much every single currency, how it correlates and what moves against the dollar, and when the dollar will gain strength, what will it will do in the forex market. So I've traded for this for a long time. I mean, if we look at the weekly RRG, look at this. So here's gold right there. Yeah, for the next coming weeks, if I would have to make a case of a dollar strength to hold, it will be in play at least for another quarter. Okay. Why is that? Is because dollar right there has again has done nothing this year, right? It rallied up, sold off, made a new low. Now just because the year coming to an end is where the dollar just going pretty much right back. I don't know what the open the where let me see if I can do No, it's not gonna let me do it here. Let's see. I can change it here. Here. So here's your dollar for this year. Now this is last year, okay? And this is this year. You see, like it's not doing anything. But but when dollar is gonna gain strength, like this kind of a move, yeah, there's no currency in the world is gonna go against the dollar. Dollar has a lot of strength. It can put every multinational company down. Okay. So big corporate multinational companies, they hate strong dollar. Why? Because they have international exposure. It hurts their earnings. Companies like IBM and stuff, okay? IBM and all these companies that have overseas business, they they hate US dollar because all those contracts and all everything what they charge to their clients and stuff, they get paid in dollar. So so that so when the currency exchange rate goes up, you know, for them it's not good because when you run in $1 million worth of transaction over a certain rate, let's say you exchanging currencies at a $100 rate versus now you're trading at 106. Okay. So when you factor those millions of dollars with this 5 or 6 point difference, what do you think is you just basically getting the same, like you're getting the money in, but is going to be worth a lot less because your currencies is much stronger against euro or Swiss franc or whatever, all the other currencies. So, I mean, 2 years, dollar hasn't done anything. But now the point is that the dollar is right there to this last year high that we just showed you in the divergence. Can it poke above this range? But now keep in mind this. Now, unless this is just going completely turning like this around, that's a different way to look at it. If we're doing this, that's different. That could take another year or two, right? But if we look at a price, if you look at the overall trend, if you have a decline on any stock or any price, whatever you look at, if the price goes sideways, it continues like this. It's the same thing to the upside. So if you had an uptrend, price consolidated sideways, and then eventually find its way up and go right back up. That's how the trend travels. I mean, if we're doing this, so the question now is, does Trump will support this move in a keeping a strong dollar? Because if dollars from here starting to go toward this mark, it's gonna hurt a lot. It's gonna, because none we have to look at this. Are we going to close this spread? Because I would be worried, and I mean, it's still got a long way to go, that if dollar happens to make any kind of a divergence, something like this happens in the next couple months, in the next quarter or two, we're gonna have a problem, you know. So we're gonna I mean I don't trade currencies anymore. I used to, but I'll I'll keep an eye on it. But this is not something that is gonna be like come into a play in the next week or two or three. It will take a long time. I mean, you just gotta have to factor several months um, for this to see which way it goes.
Mo,
Yeah,
you said that when Trump starts trade war against China, you said that the scenario is like in Chinese government is going to weaken the Chinese yuan.
correct.
So do you have that Chinese yuan chart?
Well, I don't have. Well, if I can pull it up, but what is yeah, they do this is the same. Look, countries are well, some of you guys don't know much about currencies because you never traded them. Like there are commodity countries, okay, like Canada. Now Canada economy runs on oil. Everybody knows it, right? This is like what a third. Venezuela is first, or Saudi Arabia. Canada is like a third or fourth largest, producer of oil. So Canadian dollar is heavily rely on oil prices. Okay. Australia, like you talk about, let me see, I can give you um where the heck it went. Um Canadian is all about oil. New Zealand is all about dairy products and stuff, right? All the milk and stuff, and like all the it's a commodities. And euro, we all know, right? Australian dollar is all about copper. Australia economy is it's Australia is the largest producer of copper. Okay. The largest buyer of copper in the world is China. Okay. So Australian economy is very highly dependent on China. So there's going to be they have years and years of contracts signed with China to buy copper from Australia. British pound, we all know. Here's got your Swiss franc, Japanese yen. We know that they're the second largest holder of U.S. Treasuries after China. So, and then you got South African right there. It's all oil, and here's your Chinese yuan. So we can look at a Chinese yuan here. I have a chart here, but oops, make this thing. So here's Chinese yuan. I mean, this is a weekly time frame. Now, if dollar is gonna hold strength, which we can see, you know, i- this yuan is gonna break down. But if we look at the the trend here of yuan is in a downtrend, right? I mean, it had this rally right there, and I think the lately the where the dollar strength just come into a play into a year end, it just put Chinese yuan right back here. So, I mean, these are much bigger. I mean, here's your monthly. I mean, it's just, I mean, these are pretty wide, like large swings, if you see, right? I mean, it's just basically the price is making lower lows and lower highs, right? Here's your low, lower high, lower low, lower high, lower low. So the Chinese yuan is in a downtrend. So if we go back here, this is the weekly chart. I mean, you got a bit of a spike, reverse it right back down. So you got a double top, you got a double bottom here, right there. So here's your double bottom. Um, Here's another double bottom right there. See, a lot of the currencies are currency trade a little bit different than the stock prices. Okay, forex market is pretty volatile. It's like called like a Bitcoin. Bitcoin is volatile as well, but currency is because it first of all it trades 24 hours a day. I mean, it's closed now. I mean, but the forex market is going to open same time, and the future is going to open on Sunday. Oh, sorry, they open an hour before than the future opens, and it trades the same way, 24 hours, around the clock. Um, so does the futures, but currency market is 3 times. I don't know. They're like in 24 hours, they're like over $3 trillion worth of money that exchange around the globe in 24 hours on a forex market. That's how huge the forex market is. Have you ever seen $3 trillion in a stock market? No. That's how big forex market is. You talk in 24 hours, okay? One day, over $3 trillion with the T that exchange back and forth around the globe. Think about it. Because the world is moving. I mean, if we're going to bed, all the other countries are working. And then they go to sleep, we're working here. So, the world is moving. I mean, everything is, banks are open and all these wire transfers, back and forth, they're in play. Like you have JP Morgan Chase and all these other banks that are in different countries. What do you think they're doing? They have the liquidity, and if the banks closes here, and that's how the transaction runs because their banking sector takes off their part, and then the US opens and the US banking sector, system opens here. So, I mean, Chinese yuan is just kind of a bit of a sideways here. Um, but if we look at it based on relative rotation graph, as we can see that because the benchmark here is the US dollar. So for the next couple weeks, it could be it um, it could take probably another month or two. The dollar is gonna hold strength. And dollar goes up in a forex market, there's nothing is gonna go up. I can tell you that. That's why I always say the king dollar, has crazy strength. US dollar has. It will roll over every single commodity. There's nothing is gonna rally. $1 is gonna hold strength. So something to keep an eye on. But relative to the market, I'm just not that. I mean, all the action that happens in the forex market doesn't, you don't. We saw where S&P is compared to the dollar. Let's keep moving. Qs. Yesterday I was looking at this. Qs are down 5 days in a row now. Okay, this is the first time in this year since January 5th of 39 when the price was 395. The Qs are down 5 days in a row. Okay. This is rare. It doesn't happen that often, as you can see. So this is the most it was down before was 3 many times, as you can see it here. All year was right there. See 3, 3, 3. All these ones are all 3. So never did 4. And then yesterday we did 5. Okay. And we're basically looking at this that we had an oversold RSI. Okay, I have a lot of people are asking me about why I don't follow 14 period RSI compared to a 5 period RSI. Okay, 14 period RSI, first of all, it lags. Okay, so I'm not a very big fan of 14. There's some guys are taking 14 RSI and then looking for those divergence and things like this. And based on the wave counts, they're like, oh yeah, the X wave went up this much, but there's no clear divergence on the 14 RSI and stuff. I don't do none of that stuff. Okay, that's just a complete wastage of time. What I can tell you is when you follow 5 period RSI, okay, you're gonna have much better read, and it's gonna give you a pretty a good you could find a pretty good entry as well on a pullback using a 5 period RSI. It has a pretty good result compared to 14 period of RSI. No indicator is going to be a golden one of a kind indicator again. I mean, if that's the case, I mean, everybody would be just sitting and trading based on this, but it does give you a pretty good clue, like, because this is a relative strength of the price is how the price is trading based on overbought and oversold levels. So if you just study this and look it up, like, okay, well, let's take this year. RSI was when all the way down here to the oversold territory right there. And this is where the bottom was at 413. So this is this is the daily chart, but then as soon as the price comes right here to this point right there, which was this day, okay, so then what happens is for the next 2 more days, you had to take two more days worth of a punishment. Okay. So when you take 2 more days of punishment is where the RSI goes completely oversold. Now keep in mind that market don't stay oversold for too long. Okay. It can remain overbought for too long, but not oversold. Buyers gonna come in. It's just they're gonna push the market back up. So now if we look at this low, we had now if you look at this price action here, that happens here. That's a pretty big dip. But that again doesn't mean that it's gonna like it goes into an oversold here and it will definitely can give you the bounce. You can always play a bounce. And if that bounce starting to look good with the overall market, I mean it could gain strength, right? But there's gonna be several there there could be a several days that RSI can just stay under pressure along with the price, but then it finds its way up. So 5 period does work much better than the 14. Okay. So we can do is I can do this. I can show you a 14. There you go. So here's your 14 and 5 side by side. Okay. Now look at the read on this on the 5 period RSI compared to the 14. Make this thing a little bit. See? So the 5 right there is a 5 period compared to the 14 period is a longer time. But we want to make money quick. I don't want to sit and wait and wait and wait for kind of show me signs of, I rather focus more on a 5 period over 14. As you can see, like the 14 on the cues really, doesn't really goes down below this mark of 30, as you can see it all year. See, just like it literally comes right there to the line right there, and then 14 started to gain strength. Same thing here to this low, right? From this, and then starting to gain strength. You see, like, and now from this sell off, it didn't even come down and touch that thing. But here gives you this oversold read, So 5x, because it's a shorter time, shorter period, it's gonna give you a quicker kind of moves, on the relative strength based because in a shorter time frame. And then from here, you see like RSI here went to the oversold, which is this low right there of this 483, but the 14 still going like this. So if you look at this decline right there, that gives you this decline, put the price down into an oversold territory right there. It's below 30 now, right? Right now, the RSI on this one is 28.63, which is below 30. And then from here, market took off, which is this move. So now what we're doing is this, which is exactly what you see here. Starting to curl here, but it pretty much looks the same because it's just the 14. So the point is I prefer 5, and you should you should do the same. I mean, you would, and I'll show you the other example that we just did the trade. I've taken a lot of trades based off uh you know just to looking at the RSI read on a 5 period, and then to look for the support and see when we can find an entry. So what we're looking at now is we're at 5 mark, and in I don't know, are we gonna go to a 6 on Monday? Are we gonna reset this thing back down? So we're gonna find out. Um, the election gap is at 492.88. Okay. Price closed yesterday at 496.57. So we got another, little roughly 3 points to go to fill this gap. But then yesterday we put a gap here between 503 and 507. Okay. So I have this we call a gap finder here. So this gap finder tool, what it does that it points out, it picks up all the gaps on a chart. So this is the gap, it's an open gap. So there's a little bit of room left to fill this one. This one didn't pop yet, but might do it on Monday. So this was a gap here, closed here. That was a gap here, closed here. So it's the call a gap finder tool. This one the Optima has. So I mean, can we expect a bounce on Monday? I mean, I think we should. I mean, if um or we just take another day or two by Tuesday or whatever, but um, we should try to see if we can find something to play a bounce or something. So that's the story on QQQ. Okay. Um Tesla. I took an entry, what, 2 days ago, yesterday, whatever, that we closed the trade on. Now I'll give you the same example of this RSI, okay? And how I found, well, how did I get into this trade and why did I get into this trade? Okay, I'm gonna give you those. I'm gonna give you that answer. Here we have a sideways chop for weeks. Okay. And if you noticed here that how many times, okay, that's RSI 5 period when oversold, right? Many times you can see. I mean, it has very shallow bounces, as you can see from, this is the 1 hour chart. And basically it was trending down, 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 for a very long time. And here at this low is where the RSI was oversold, as you can see right there. And then from here, it finds its way up like this. Okay. And so this was a channel that broke to the upside. This, I believe, is the election run or whatever, right? And here comes the pullback. So we hit a 360 mark. And then ever since, we're just took what, 15 or 16% decline. Now, this happened after hours. No, it didn't happen there. 16. So here's your 16, and here is your 12. So you got a 12 here to an oversold, and you're like right here in this uh, to this to the same percentage range and to an oversold RSI as well. So when you have 12 here, and there's one Tesla got the pop, you're gonna have a pretty good odds that Tesla will do the same thing as well, right? It could spend another day or two to the downside, and but it will move up. So what I did on this the on this trade is, so I don't give you all this when I put the trade on because I'm looking at things in my way. I put a VWAP here. So this pink line that you see here is a VWAP, which goes from this low. Because what I was trying to do, I wanted to see like, okay, where the Tesla made a low on the last recent decline. I'll put a VWAP right there to this bar, and I'll put a VWAP right up here to the very top of that 360 price bar is where it made the high. So I have a high of 326, and I have a VWAP sitting at 311. Okay. And then this 311 with this VWAP gives me this exact fib of this 310. Close to 311, right? So here's your 360 and my wave count. And if we run the measured move of this wave 2 with wave 4, okay, that gives you 310.65. So like here's your 100% relationship of wave 4 with wave 2. That is the minimum, right? So the low was 309.22. So we got into a trade at 311, if you right there. So I took this VWAP entry. I was like, okay, we have a VWAP sitting here at 311. I have 310.65, worst case 307 is another 3 points, 38.2. I have this sitting here along with this channel, or you can just make the wedge. Depends how you're gonna draw them. I was like, we should expect a bounce from here. So then yesterday I put a um, price target on them of that 322. So the 322 that I took was this low right there. Okay. The reason why I took this 322 target on this one because it has this low of November 12 and this low of November 13. Okay. So it was a double top here. So it was this was the first low that the Tesla made. It got the bounce, came back down. Okay. Made another so went right back to the support right there, got a bit of a bounce. After a couple hours, it finally cracked lower. So when you break that double bottom, remember the same thing. Double tops, double bottoms, triple tops, triple bottoms, they're gonna get taken out one time. It's just a matter of time. Okay. Stocks normally don't bottoms or tops with those double tops. Okay. The price can come back down, but eventually, one day it will clear it. But the problem is just to time the damn move is to want to target that double top. So that's why I put this 322 price target on Tesla yesterday. So we got here to the weave up. I was like, okay, I got a weave up here at 311. I got my fib sitting right there. I was like, it should be a pretty good entry point. So I got into a trade and we exited the trade at 320. So we poked right there, backed off, and we're just literally closed right there. So I got out of the trade. Now the question is, should we hold this trade or because now the question is, I don't know how this fourth is gonna go, first of all. Nobody knows that. I mean, if Tesla does the same thing like it did it here, so like this is your one, this is your two, here's your up in three, here's your four. If this is all a four here, then we just go and make a new high, which is going to be fifth wave of one. So we just need to complete 5 waves to the upside. Or again, we just, again, we just take this channel, take this channel. Last time it broke higher, can it do the same thing? Yeah, it can. It can go in many ways. We don't know that. It could fourth waves are just nightmares. If they can go, it can go. This could be all of low right there. This could be just an ABC. You can put a W here. You can do WXY here. You can do another subdivision here, a WXY. You don't know how that thing goes. Fourth waves are very, very tricky. Seconds are easier. The second wave, because you get the initial move, all you do on a second wave, you just look for that 38.2, 50% retracement and 61.8. So in this kind of three zones here in a wave two is much easier to find entry. This one right there is more tricky is because the four can be a flat. It could be a zigzag. It could be a triangle. Just, I mean, there's so many ways the fourth wave can unfold. So the the triangle only happens here in four. It doesn't happen in two. But the rest is going to be the same. You got an ABC here, could have a WXY or however you want to, subdivide that one. You can't sit and guess all your corrections up front. Oh, it's going to be a simple ABC move. It's just not how it works. If that's the case, I would be just labeled pretty much everything in ABC. I don't have to worry about all these complex corrections and things like this. So, I mean, it does look like a kind of like a three-way move so far, but now it's just like sitting right here at this resistance. Okay. is to see if it could clear this. If it happens, can, I mean, that's the plan for Tesla. Or it just, if market kind of, because yesterday Tesla was traded pretty well compared to the overall market. Every tech stock and software company or whatever sold off pretty hard, and Tesla managed to, you know, go up like another 11 points. So we were in a we were in a right trade yesterday, to be honest. I was like looking at over, I was like glad something is, looking at Amazon and all the other stocks that taken all the beating, but at least because Tesla took this beating a day before, the market was pretty much flat. It wasn't really moving much. So that's how the trade went to come into a play. But I mean, look, a lot of you guys were always into Tesla and this, but look, I mean, I will tell you that how I trade Tesla stock is I bought shares, or you could buy shares, okay? And and then you just have to trade with options. Okay, you just keep hedging. It all adds up. Okay. So if you, and I'm not saying that you should go and jump on them on Monday morning. If you buy Tesla shares at 320, so you have an entry at 320. Okay. So you don't have to worry about time now. You don't have to worry about anything. So you are in at 320 for shares. Now with options is you can play the downside and you can play the upside as well. So obviously if the shares, if the Tesla stock comes down, yeah, your shares are losing value, right? But at the same time, if the price comes down on the shares, you can buy calls, you can make a spread, or you can do whatever, and you can just at least try to offset what you lost here, right? If you want to play the upside. So you keep shares at X amount of whatever price that you bought them, and you just keep hedging them with options. I've been doing the same thing, okay, all year. I made over $70,000 on Tesla this year alone. I have $150 entry on Tesla, which was 3 years ago. That was the punishment that I took, as many of you know. And I dumped half of it at 300, and I still have 175 shares that which I am gonna be holding it for a very long time. Um, but at the same time, I'm just keep trading options. So I keep my shares as is, which I have a pretty good entry of 150. I hope it doesn't go back down to the flat line again. But at the same time, you just keep the option plays. So if you don't have the option trade on, and if the Tesla happens to make the move, you have shares. So it is gonna average it out to you. Okay, that's the only way you're gonna trade. Like if you just say like, well, I just want to jump on leaps, or I just want to buy a long dated spread, or I just want to buy a long dated call, and I'm just gonna hold my. But you don't. Those are tough because this stock is just it doesn't follow the market. Okay, it doesn't trade like Apple, Microsoft, Amazon, and things like that. It's not a macro stock for the S&P, or it doesn't work that way. It's just this stock, it just works on its own. It's a very news driven stock. Now it has become a political stock, so it's always something. So if you like this stock and wants to stay long, it's the only way you're going to do that. Hang on to those shares and then just keep trading it with options. I trade options on Tesla all the time, but I don't trade like three trades in one single week on the same stock. I don't do that. It's just not the way I just showed you how I took a trade and what was my entry, how I managed to find an entry based on the RSI and the VWAP and the fibs and the wave count, So, and then from there, I exited the trade and I was like, okay, fine, I'll just take out my money. So yesterday when Tesla popped 11, 12 points, my shares went up. So does my option trade plays out, right? So it's gonna average you out over the months or close to a year. That's the only way you're gonna trade this stock. If you say like, well, I just want to go and buy a 400 next year calls, you know, I mean, you can do that, but those premiums aren't going to be cheap anyways because you're gonna just buy in a 1 year out worth of calls. I was thinking about it. I might do one or was thinking about making a next year in December, okay, which is gonna give you a one full year, is to make a diagonal spread, you know, like basically just to eliminate the entire time decay out of the out of the spread, and just to see if Tesla can give us some upside for the next year, because we looked at those monthly RG and stuff before, and in the coming months, I mean, if I would have to make a case for Tesla, it does looks good to me. Um, as
What
long
about
as
what about the stock replacement strategy with options, like buying you know, for deep in the money, leap like Nancy Pelosi's husband does time to time. And if the conviction to upside is so strong, rather than buying shares, it's cheaper to buy it for deep in the money options.
Mhm.
Delta is like 100%, which is like every dollar moves, option premium moves $1, right?
Correct. So it depends what delta do you pay. If you're gonna buy deep in the money, yeah, you're gonna pay a much bigger premium, and it's all about carrying what delta that you wanted to carry. You want to buy a 70 delta option premium deep in the money. It's gonna have a lot more intrinsic value. Plus, it's gonna have a lot less time decay because the call is gonna be deep in the money, and you're gonna pay more for it. So, I, I was, if you wanted to go further out of the money, I mean, what I see right now for Tesla, okay, if you remember, I talked about this thing before. This number right there, you have to remember this. This. This is where Tesla keeps a $1 trillion market cap crown over their head. Okay? So remember that. If it loses this 312, 313 mark, it loses that 1 trillion market cap crown. Once the market hits that 1 trillion, it's going to try to fight that as much as it can. It's just to hold that market. That's huge. Tesla was down almost close to like 550 billion at one point. Okay. It was trillion before. It lost almost half of it when it came back down to this 130, 140 range. And now it's back to this 360 to this 313. So what you need to put one thing in your head is to keep the market cap in your head at 313, and you see where the price came back down to this 310, 311 area, and see how it responded right back up. It's going to fight because this is what it is the market doesn't the it just doesn't want to lose that much of a market cap. So now everybody's sitting like, oh, Tesla go to 300. Oh no, it's gonna go to 280. It's gonna go. It's just bunch of BS. Okay, like people. There are some people that talk like they know their precise, these beautiful, lovely bond numbers so well. Well, then why are you trading if you know that price is gonna come exactly down to that price? I wish I know. I would have made you every single one of you millionaire in a couple months. But they're just, I mean, people have opinions, I totally get that, but just to something to keep in mind is this 312 kind of let's see if I can show you yeah, I have a look at it now. Um, See right there, 1.29, it's 320 now. So Tesla's an eighth spot right now. It was down here at one point, um, right below Meta. So you gotta have to pay attention to these companies, the top ones. You know, I'm watching Eli Lilly. It's just this is a Nvidia of a Nvidia stock or pharma. So an expensive stock for sure. I mean, I hope they could just split the stock. That would be nice. This is as stock has a very good returns over years. This stock has just a huge market cap company. So I'm watching this. Some was working on the wave kind of thing. I don't know if I finished it or whatever.
Yeah, but the
Yeah,
Eli
but
Lilly is also a target by RFK Jr.
correct, I know. But I would,
He's
if
gonna say, eat healthy,
I
forget
know,
Ozempic or Mounjaro.
correct. Yeah, Eli, but I'm a guy who likes to trade big names. Okay, as you probably noticed that I'm not a very big fan of some these small caps, whatever companies. I like to trade big names. Why? Because better volume, steady stock, much better fills on entry and exit. Bid to ask spread are very narrow. They're not as wide. There's plenty of liquidity, you know, option side, stock. So that's why I always hunt for the leaders. And I've noticed that if the sector is lagging and eventually when it improves, so the companies with the biggest market cap always going to come back quicker than the rest of them. So you always focus more on the big names instead of a smaller name. I mean, that's why you narrow the results down with the market cap because it's very important, how much is the one company carry, how much weight to the overall sector. So the bigger the weight is, meaning that the price of the stock is going to recover much more faster than the rest of the communication stock. Like let's say Meta or Google. If the XLC, the communication sector, will starting to improve, it will only it's going to improve based on these names, Google and Facebook. Why? Because Google is 2.1 trillion market cap and the Facebook is 1.39. So if this stock is going to come down, it's going to pressure the XLC communication sector to the downside, right? So if if Meta is going to report horrible earnings, XLC is going to be down no matter what. And once the top leader is going to fall, it's going to take everything down with it. It's just how it works. So this is why the Mag 7 is just, Walmart is great, Visa is great, United Healthcare, Exxon Mobil is on. Remember, I don't know if you guys remember that Exxon Mobil used to be $1 trillion market cap company. I don't know if you probably know that or not. Look how it fell back down. This is XLE Energy. Exxon Mobil is the largest, the most weighted stock in the entire sector. It literally follows XLE chart side by side, Exxon Mobil. It's basically identical chart. So buying an ETF, just the ETF is just, um, it doesn't give you that much of a beta, you know. I mean, except for Qs, because Qs are a much high beta ETF. SPY has is pretty good, but the rest are just, you know, I just focus on the leaders. And here's Nvidia. Nvidia earnings are coming up next week. Um, those are um gonna be gonna keep an eye on that one. So so that was Tesla. So just watch this one. I don't know. Um, now the worst case is that Tesla can come back down to 292, which is just 50% retracement. So these are all your retracements here on Tesla. But so far, just if I just take a measured ABC move of 100% with this with the wave two, it lines up right there. Now it's a matter of like if it clears this one to the upside or it just kind of goes sideways. But it all we'll see what happens. But the thing now is that the invalidation here is 273. This fourth wave needs to stay above 273. Okay. And what was that yesterday? Um, Baron, the huge
Well,
Tesla guy, and he was talking about Tesla being, geez, I don't know, 10, $15 trillion company or whatever. He was on CNBC or whatever.
Yeah,
Uh,
he is a bull of the bull,
huh?
bull of the Tesla bull.
I know.
He's one of the early investors in Tesla, and he
Yeah.
100% believes in
He has
Tesla.
made a lot of money.
Oh yeah, he made a lot of money with Tesla.
Oh yeah, everybody was bear. This is a stock has a very weird kind of a characteristic. Like basically, what this stock, what it does is like it stays down, is going to is it the all the sellers is gonna come into this stock, try to press this stock down, and then it just pulls the rug. This is exactly what this stock does. This entire pop right there from election, which was here, it's squeezed. I don't know how many of these short sellers, okay, on this move. 50% move. 50. Think about it for a second. So every time when you see gaps, like they call acceleration gaps, when you see any price that makes gaps after a day or two, like stock opens with a gap, didn't fill the gap, trying to stay up all day, end the session, and then the next day stock happens to kind of like opens with another gap. Okay, you just right away you should know that this is some sort of a third wave into a play. Okay, second waves and fourth waves normally don't get acceleration gaps, or does. So if you like market is gonna like this is the perfect example right there. Okay, here's wave one down two up to 50% retracement. Here's your gap. Here's another gap. This was a gap right there. Never got filled, basically, right there. A little teeny tiny one. Here's another gap. You see, like third wave is going to show you these acceleration gap. Like see this fourth wave, you don't see any gaps. Second wave, you don't see any gaps either. Third is gonna give you those gaps, but not always, but most of the time. Because third is the most powerful wave of the trend, right? We all know that. This is what I always call the money wave. That's what I'm always chasing and dying to trade this third wave. It's just because you're gonna is going to have the most alpha, and it's gonna move really fast because this is the way the third goes. A third has to get to at least a 100% relationship of one as well. Otherwise, it's going to be shorter, which is this, you know? So, so meaning that the distance travel here down to the retracement has to get to at least 308.06 to put a 3 here. A wave 3 cannot be the shortest wave of the entire trend wave. Okay? It has to get to at least 100% relationship of wave 1 to be labeled as wave 3. The golden ratio of a wave 3 is always this, 161.8. This is where the stoppage point is of the third wave. It can go up higher. It can go 200. Oops, I don't have that. It can go 200 right there. It can go up here as well. Oops, 261.8 as well. It's not, but the point is like these are your targets. Okay. You need to get to at least 100% in order for you to even label a third wave. If you have a shorter 3 here, is your first of all, your wave count is wrong. Okay, because you have a shorter 3 compared to your wave 1. Second thing is this, if you manage to kind of like scrape around here in your fourth wave, and then you can make your way up to the fifth, you could have like a 5-way move. The 5-way move is going to look kind of weird because you're going to have a shorter third wave. So you're going to have one like this. Here goes your 2. Here's your 3. Here's your 4, and here's your 5. What kind of wave count? Look at the look of this wave count now. It's just wrong. Just your wave count not going to have the right look. Plus, this is why it has to get here. Golden ratio is this. If price is really going to accelerate, gets to 200. This is where the price starting to get into an overbought territory as soon as it's going to hit a 200 mark. And then from here to here is where the stock is going to go completely overbought. These two in this zone. I'll show you any RSI you're going to challenge me on this, that as soon as it's going to hit this mark, okay, your RSI is going to be oversold.
What?
Want to see it? I'll show it to you.
Hold on.
There's RSI. Oh boy. I don't have an RSI here. What? Oh no, it's showing the bars. God, I'm gonna use this anyway. Oh, there. I don't use any of these stuff here. See? As soon as you're gonna hit this 161.8, oh, this is 5. And do the you can do 5 or whatever. You can do the 14. Show you 14. See? It's gonna be over by well if we didn't get there, but I'm just um I'll just show it to you. It's going to be overbought as soon as it's going to hit the 200, 261.8 mark. So Let's do this. Okay, so yeah, I was working on yesterday, SMH, semis. The semis, what I hit is like, okay, here is that same, the bear market that we had down 47.62% decline down in October of 2022 low. Looking at semis here, wave one, here's your triple combination. You can make it as a ABC if you want. It really doesn't matter. Um, up to July 11th high, which was 283. And then from here, we had this three-wave decline. Now, if you notice that since July, since the SMH made an all-time high of 283, hasn't done anything ever since, right? It's just pretty much just been sideways. So if we go back here, the same thing we just talked about, here's your wave one, wave two, up in three, which has made the 100% relationship of one, which is good. So this is a valid wave three. And now what we see here is this is where all these semis are just making rounds after one after another. But if you look at the SMH, right, it doesn't show you that much of a weakness. Why? Because NVIDIA is holding it, most likely, and TSM. These are the two top holdings. So what do we make out of this here? I mean, what I can see is an ABC here. This can be counted as a clear leading diagonal. Okay. This is a 5-way move. Now, this move right there, what I see here is most likely a 3-way move back down after 5. This is the counter trend. So we can do that. So I was somebody asked me on Twitter yesterday and said, like, Mo, can you please send me this? That's why I was sitting here, just looking at this SMH just to see, like, what the heck is going on with these semis all of a sudden? They're just not moving much at all. I know a lot of them reported earnings wasn't that good. I mean, you got uh, applied, the AMAT, Applied Materials, reported earnings, a little bit of a softer guidance they're given. It's kind of very, I don't know if this AI move has been fully baked into a market, which it looks like it now, that all these companies that they took off based on this AI boom, based off Nvidia being at the top, and which we know where Nvidia is sitting right now with the market cap, and and the rest of the companies are just not really given the strong guidance, except for the only companies earnings that I really liked was the TSM. They reported like unbelievable quarter, right? But then at the same time, when you look at ASML, yeah, they happened to release earnings a day before by mistake because somebody pushed the button. I've never heard such a thing like this, and the stock just got killed, you know? Then the next day, they actually reported those earnings. They report those earnings. And and then look at AMD. Horrible. I mean, you cannot, what do you make out of an AI story on AMD? None. There is no story of AI with AMD. And But again, those stocks and everything is all trading here in this ETF anyways. So ETF is always going to be a clear picture before you hunt those individual stocks. Here's your 78.6, which is at 262 of this decline. Okay. Price went right there to 78.6, 262.26, 78.6, but 262.93, backs off. Made another attempt, failed again. So you have two failures here because because you guys know what 78.6 is, right? 78.6 is always going to be a last resort. You're going to crack this, you're going to go right back to the highs. This is where the decision gets made. 78.6 is the most important fib. So we have double rejection here at 78.6 on SMH. This is why all now the thing is that these dips of this 7-8% dips that you see here is where most of these stocks that evolved, which they got hit on earnings, they're down like 30, almost wiped off pretty much the entire year to date gains, you know. But the question now is, semis are important, as we all know that, but there's a big risk trading semis now, especially with Trump, because he's going to punish China. And semis are very the sensitive when it comes to tariffs. So, I mean, looking at this, if I put 3 here, okay, you have to make sure that your wave count looks right. Here's your 1, that's your largest correction. This is your second largest one. Basically both the same. There's no other 2 corrections are bigger than these ones here. Okay, so the corrections happens where? In wave 2 and wave 4, right? Because those are the counter trend moves that moves against the trend. So every time if you're trying to make a wave count and if you're kind of a bit confused where to start, where to label, all you have to do is just pull up a daily chart, a blank chart. Okay, you don't have to do anything to it. Take a good look at the chart. All you have to do is to label or circle the 2 largest correction. Okay, don't worry about any labels for now. Just 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 grab whatever circle or marker, whatever. Just circle 2 largest correction going up. Now you should know on the top of your head the correction unfold where? In a wave 2 and wave 4. Nowhere else in the trend, right? So all you gotta do is you gotta put 1 here, 2, and then you make it 2 and 4. Okay. Now, either if you want to sit and fight these smaller waves to see like, okay, now you need 5 here, okay, to make 5-way move to complete 1. Then you have a corrective wave. Then you need another 5 to complete 3. Then you need another 3, and then you need another 5. Okay. So looking at the chart here, as we can see, semis are literally just taking a breather. Okay. This is just like taking a breather here. So yesterday dip that we had was just, if I would kind of like put it as an ABC, like A here, B here, C, the exact relationship was at 239.93. The low was 238.80. So you got like little two measured moves. Now you have 2 versus 1, which is 23.6, 38.2, 50% retracement. Now, if this is a diagonal, okay, so your minimum downside is always going to be your prior fourth right there. Okay. This is if you have a diagonal that goes up, or you have an ending diagonal that is coming that is forms up on the top, okay, your minimum target always going to be your wave 4. This is where your minimum target is. But there is a pretty good chance that is going to come right back down to wave 2. That's your second target. The reason why being is because diagonals always going to have a deeper retracement most of the time. Sometimes they manage to stop somewhere around here into this fourth, and they're just going to go right back up. So you have 5-way move here, 3 down. What are you looking for next? Another 5 to go up into 3. But then if you have a diagonal in wave 1, you're going to have a very good chance that you're going to have an extended fifth wave. Is remember this, okay? I can show you this in many charts. So this is where SMH is basically. I mean, I wanna, this is good, but RRG not, it is actually supporting this weakness here at the time, but if I could buy something here, I mean, if I know that NVIDIA is coming, if NVIDIA is gonna, I mean, I don't expect that NVIDIA is gonna report any horrible earnings. There's Blackwell's production and stuff; those numbers are coming up as well. So if NVIDIA can help semis SMH to clear this, then we can make a move back up. If we don't, or if NVIDIA doesn't do much, okay, there's going to be a lot of action in NVIDIA. You know, if NVIDIA would miss and if NVIDIA will come down, there's buyers. People's going to be buying that stock after hours, you know, because there's a lot of people had missed out on NVIDIA run, you know, and they're just like dying for weakness on this name. Because keep in mind that this keep in mind that this is the most valuable company in the world. So if it's gonna come down, he's not gonna lose that much of a market cap. So just keep that thing in mind. If it happens to if NVIDIA does pull back or comes down based on earnings, that would I could see that this C is going to extend of this too. So we're almost here at this wave 4 I just tell you about, right? It's a matter of like getting down here to this wave 2. And NVIDIA is gonna surprise. I mean, semis are just gonna definitely is gonna show you that response. So that's the I don't know if SMH is just gonna end the year like this, being sideways. This is definitely some sort of a fourth wave. It's the only way I look at it. You know, it's taken a lot of time. This is August right there. We're in November now. It's not, I mean, you can clearly see this price compared to this. It's just that I just told you this thing before. We just went over this thing before with the US dollar as well. Okay. You have to learn how to study a chart. Okay, it just I can show you some things, but when trend resumes, okay, at some point it's going to take a sideways pause. And then what happens? Trend resume back again. Now we're doing what? Same thing. So does it have a good chance that it could continue like this? I think so. That's the nature of that's how price trades. It's just, you can make the same exact case to the downside. Market is fractal, right? There's repeating patterns, right? That's what it is. What it is. What do you think is doing here? It's repeating the same thing. Now, if you want to make it more advanced and more technical, I mean, you could that you come to the Elliott world, you know. I mean, if you want to make it more with your fibs and ratios and time and that kind of stuff, there's so many different ways to do it. Like if I just showed you an example of Tesla. If you would have just factored two things in your plan before you enter a trade, is you take a VWAP, you take an oversold RSI, and if you get into a trade, you can get the bounce. Don't you think so? Now, for me to show you this is one, this is two, this is three, this is four, that's different. I don't have those VWAPs laying over there. I can put it over there, but you could keep your technicals as simple as it can, doing like this, or you can step into an advanced part, okay, that will require a lot more work, is to count your waves right, lay out all your fibs right, and things like this. That's different. So again, every trader in the world has their own style of doing trading. Not everybody wants to be as advanced as like me. Okay, I can show you some of the stuff that you have never seen it before. Okay, but there's no point for it. So when it comes to price, I analyze price some way different way. I look at things way differently than most traders do. Okay. Some likes to keep their technicals as simple as it can, which is good. Okay. It cuts all the noise and you just simply um, take, like if let's say if I wanted to enter a trade here at VWAP at 310, so that's my entry. So if I want to do whatever, put a stop loss right there at the low, here's a target. So you can do that, you know. So let's say you want to play like this, you can do this. You pick an entry here on the one VWAP, okay, and you target the VWAP right up here from the highs of 326. This is where it's sitting right now. Okay, and then you put your stop loss basically right there at the low. Well, price wouldn't come down here. This is after hours right there. This low right there. These are after hour lows. So the low of the session was 309.22. So 309.22, the price here was 302.70. See the difference? So the session, whatever the Thursday low was 309, whatever. This is after hours. So you can do that as well. Entry here, target this. You can definitely make good money. Depends how you size up your trade, right? But you can just it all depends on your style, right? Because not everybody has much time to sit around and do all the charting because it is a very time consuming job, right? So if if you some of you guys want these kind of a price like the a simple charts, I can do these like in a blink of an eye, you know. But like and then you when you sit in and you want to do this is gonna take time, so it all depends what you like and what interest do you have, and then you just learn and just makes it gets and then gets better and better over time. It's all about practice. It's all about practice. More and more time you will spend, and then and it gets better and better. It's not going to get worse. you know you don't spend 5 years on one thing, it just gets worse and worse. It improves over time. It's just a matter of like how passionate you are and how much interest you have in doing it. But people are working. I understand a lot of you guys work from home and a lot of you guys have jobs and families and stuff, and you guys don't have enough time to do that unless at the same time you wanted to learn. But you have other needs, but you cannot spend that much time, which I'll do it for you. You don't have to worry about that part. But you just gotta have to have a plan, I know that the year is almost pretty much over, I would say. There's 2 more weeks left to end November. I'm gonna have Thanksgiving coming, and then after Thanksgiving, and there comes your holiday season. Where goes your volume? It's gonna start to drop. A lot of guys gonna start taking time off. Then you got your Christmas Eve and Christmas, and then New Year's. So it's not gonna be. I don't. I mean, market can just go sideways just to kind of end the year. Basically, it had a pretty monster run. So I mean, we all I'd love to see more continuation if we can. If it's not, so I guess we just say pretty much stay sideways here is to end the year. So making this like if there's nothing like this all price right there is all corrective. Okay. There's nothing that I see that this is a three-way move. It's not a five-way move anyways. So if a three-way move here never defines a trend. You need 8 swings. You need something like this: 5 down and 3 down. It's an 8 swings. That makes a trend. We don't have that here. So I'm not going to sit and waste my time. Just a matter of I'm going to watch every day and see. Let's see. Well, first we need to watch NVIDIA. It's very, very important stock for the overall market next week. Um, IWM took a nothing. There's nothing special about this. This is just this dip, this dip, they're all the same. Okay. It's all the same. Rally, 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 rally. I mean, could be another rally, I guess. But the point is like it's ugly price action, to be honest. I'm kind of like forcing as hard as I can is to see if I can just count this thing. I mean, I counted right, and it's just to make sure that at least any like lower coming down is not bigger compared to the previous swing, so it's behaving, but at the same time it's just, I mean, it's up like, I don't know, 16-17% year to date. I mean, and now they're cutting rates, and that should help small caps because Trump, he wants to keep rates at zero. Okay. So, well, I don't know if, because if you look at one thing that just kind of makes me confused as well is this, that we had high inflation, we started raising rates. So rates went up. Then all of those rates that went up, they were fully baked into a market. Okay. Market really didn't even care much about those higher rates. Here comes the AI boom. Nvidia took off. So does the rest of the market. Every single stock, Nvidia, the AI, you know, then now is cooling off, as we can see it on SMH, starting because it's been going sideways for several months. The rest of the semis are all taking a break. Some of them are taking a hit, not showing any strong guidance, whatever. Tariffs are coming. That's the downside risk that we have on semis. Um, but at the same time, with the small caps are very rate sensitive. So we, when hiking rates all year long, market managed to go up pretty much every quarter. But now we're cutting rates, but rates are still going up. So what does that tell you? It tells you this, that the the either the inflation numbers doesn't really make any sense at the first place, that they hike so much. Because remember, inflation is very, very difficult to measure, okay? Because it has too many factors in it. You cannot, I know the data comes out, and some people really don't care or believe that data anyway, because I don't. Um, like, to take the different sectors, industries, and this, and to see, like, how the car markets and insurances and all that kind of stuff. So they just factored everything into this. Well, first, inflation used to come out every single month. And then, I don't know, a couple months ago or whatever, they changed that thing into 6 months average. Sorry, the 3 months average. So now they're taking a longer time frame is to measure the inflation. It's just too much manipulation in that data. It's not coming right exactly um to the way it's supposed to come out, like each, like, to take, month to month. Because inflation, like, yeah, I mean, it erodes basically. It's not fun to go out and buy stuff when everything is expensive. And uh and at the same time, as I said before, is this the higher rates that push the market all year long to the upside. Now we're cutting rates, and the rates are going back up again. The point here is, what it tells me, that these rates are just gonna stay where they are, because everything is stable. Because if you look at the real estate market, okay, is stable. There's not that much inventory out there, and people who have occupied homes, they're people who are living in their home, they're just sitting in their homes. But now they're talking like, oh, there is a massive, uh, people are not paying their credit cards and this and this. But that's different. That's bank. Look at their financials. Look at the if credit cards are, if people not paying credit cards, how you think they're the look at the financial sector. Just look, there are people who holding short positions, okay? Because first of all, you don't know who's trading what, okay? So not everybody can be fully transparent and will kind of tell you things to the point. Some are just different way of, they're like, okay, I want to make sure that I do well and I screw the rest of the world. Those kind of guys. So if they're holding a certain position, anything that guy is gonna post is gonna be a negative, negative, negative. So what are you doing? Basically, you just does the economy looks bad? We just looked it up. This market just ripped almost 70% in the last 4 years from 2002 lows. That's crazy upside, you know? I mean, instead of trading in and out of the trades and stuff, you just simply buy SPY. Just let the sucker run. Don't even look at it for a couple of years, you know? I mean, the point is like lower rates should help small caps, but those effects not gonna just come into a play right away. The borrowing thing, the money that they borrow, that would help them. But at the same time, these rates are going. I mean, I know a lot of people that think this that I bought a house with 2.5 or 3% rate, and now it's almost seven, right? 10, 12, 13 years ago. And we should go right back to that 2.5, 3% bracket again. I don't think so. You know, I just don't, I don't think so. If market is that stable, okay, or if the real estate market is that stable with the higher rate over the year, over 3 years, basically, since the inflation spiked, and if that tells you that the buyers, okay, can handle higher rates. If the higher rates would have collapsed the market, would be a different thing. But it's not happening, as you can see it. Oh yeah, of course. Real the who doesn't want to borrow cheap money? I would, you know, if I wanted to borrow, like, okay, I'm not giving you advices and stuff. Like, okay, so you have your accounts with Thinkorswim or whatever. You have a buying power. You have a margin. The brokerage is giving you money. Say like, okay, here's an extra money for you. If you see something, yeah, buy it. And how many people are using that? You should never ever use margin with options. That's insane. Shares and stuff, yeah, it's different. But that just gives you the extra cushion that you need, is to trade something. So you borrow capital and to say like, okay, I can make something, I can return the rest of them back. That's the concept, right? People, I mean, if the bank is making money on your money, okay, so you go and deposit $50,000 into your saving account into a Citibank. So what do you think, that $50,000 just Citibank is just holding it in their vault? No, they're gonna take that $50,000, they're gonna lend it to somebody else. So they're gonna pay you 2-3%, but they're gonna charge the other guy 10 to 15%. That's how the bank makes money. They have to keep the money flow all the time. The the risk the bank is taking is taken based on the buyer. Is the buyer that he's gonna give out the loan, is he gonna pay the loan back or not? That's the risk the bank has to take. That's where your credit report comes into a play. Like, okay, how does the history looks like? Does the guy has a job? Does, things like this? Those factors comes into a play because the bank needs some sort of a surety, thinking like, okay, yes, I'm gonna give you 50 from this guy who deposited the money into my account. Are you gonna pay that thing back? So we can make money 3 or 4 times more. So we can pay a fraction of the money for the 50 that he deposited into my account. That's how the banking system works. Bank is making money on your money. So when you same time when you borrowing money from a bank, you want to borrow as much as less as possible, is to see if you can make money for 6 months. It's like, hey, I want to borrow 50. You give me for 5%. So would you rather borrow for 5%? Would you say like, hey, you know what? No, I would, the rates at 11%. That's double. So you make 10 grand. Okay, so you make 10 grand and you pay the 50 back. Now you got 10 grand in your pocket. That's just the way credit system works, right? So it's risky because you borrowing money, and if you lose, then you're on the hook. Then you're on a hook. Now you're gonna pay the loan back that you just took out a loan to, that's the risk that you have to take. Same thing with businesses. You want to start a business and everybody wants to run to the bank real quick. Hey, could you give, nobody wants to risk their own money because it's risky because they don't know the business is going to go or not. You know, business can fall or something, and whatever money that you had, there goes in your toilet. But then you run to the bank, and bank doesn't want to lend any money to a new business because it's too risky. They don't know anything about it because they don't have enough history and stuff before they lend you the money. And then after that, the business fails. Well, you stand and say, like, you know what? I don't have money back. Fine, I'm going to go file bankruptcy. So what do you think they're going to do? The bank take losses as well because he's taking risk on you. It's the bottom line is this: in life, you have to take risk. As I tell you guys this thing all the time. You have to take risk if you, in order to be successful. If you cannot take risk, you're just going to be sitting where you are the rest of your life. Every businessman and all these people who become millionaires and billionaires, they took risk. Some of them, they just what took crazy risk. It played out in their way, and here they are. People who sit and hesitate and think like, oh no, I don't know, should I do this, should I don't do this? And if you have that kind of doubts in your mind, like, should I enter a trade, should I don't do it, is it a good entry right now, should I wait for another day, should I, if you have these kind of a constant like doubts in your head, you don't have a proper risk management or a plan in your head. You should be confident about your entry. You should feel good about it when you enter a trade. So like, you know what? Yes, this is the price I wanted to pay. I'm good. I'll just wait. You know, you should trade like this. You should have that mindset like this. You should always be feel good about the entry. What you have to do after when you enter a trade? All you gotta do is just wait. But if you're gonna sit and watch the price every single day, but if you have 30 days to 60 days to a 90 days out on your until your expiration, all you're doing is torturing yourself. That's all you're doing is torturing yourself. You have a well-defined risk upfront before you enter a trade. You putting $1,000 up on the front, you know exactly how much you can lose. There's nobody or you're gonna say like, oh yeah, you can lose 1,500, but you're gonna risk 1,000. Can that ever happen? Does it ever happen to anyone? So you should know you know exactly how much risk that you're taking. You have to set your mind like this. You know, can you if you are risking 1,000, can you afford to lose 1,000? That's all it is because option game is risky, right? I mean, your premiums can worth almost zero in next 2 3 days. Can you afford $1,000 loss? If you cannot afford $1,000 loss, can you, okay, then cut the size down. This is how I have my mindset when it comes to trading. I take a $2,025 trade, right? I know this and I'm well aware of it that I can lose $2,000. Well, I'll try not to, but depends how we're going with the wave count. But I just have the thing. I know that I can lose 2,000. That $2,000, if I'm going to lose in a trade, does that thing is going to keep me up at nighttime? Absolutely not. Am I comfortable losing a $2,000 if I'm wrong? Yes, I am. That's how I trade. That's how I have my mindset over the years. I know exactly that's how I don't play too aggressive, as many as you know that. I can, but I don't want to. I try to keep them consistent and a little more steady, you know? There's it's just it's again it's a number game in the end as well. It all adds up so quick. And you probably like, whoa, don't look at that way. One trade pays you 200 or the other trade pays you $50. That's just every trade is different. And some trade is gonna pay you 3 grand. But you just keep moving. Um, it's a pretty aggressive wave count if I mean we're right there. Ay, ay, ay. Wave one, down two, smaller one, smaller two, and this three right there. Okay, we need five. So far, we had one, down in two, up in three to this 200% that we talked about before. Was went to 161.8 to 200, near 200. And there goes your fourth wave. Here's your invalidation at 227. We're sitting right there, 227, 97, 96, almost right there. This thing is down for like 5 straight days now, same just like Q's. This one just took 5.95% decline right from the 242.39 high. So this is puking 4 days in a row nonstop. Oversold RSI should be due for some sort of a bounce. But the point is like now what this is the invalidation here. If we break this, so this 5-way move to complete this three is going to be wrong. So if I slide this three here, make this blue four like this, that would give me this invalidation, which is 224. That is what, another 2 more points. That doesn't do much. But if we do this way, but then all we have is a 3-way move from here. So we're gonna have one, two, and then we need five here. I mean, we can kind of make this thing work, meaning there's a 1, 2, 3, 4, 5. We can do this. It's gonna be very small compared to this giant wave too. It's gonna have a very weird kind of look. I mean, I don't know. He's gonna wait a few more days. Then if this side right there is starting to come down up till here, then I need to go back on a bigger time frame and recount the whole thing again because it's not gonna be right from this low. So we need to work this thing out. See if I'm here. What I did was like 1, 2, up in three, triangle 4 and 5. It's a crazy sideways price action. And then made a 5 here. Then it comes down in 2. And then you got 1, 2, 1, 2. So I've been sitting in this since March of this year. I've taken all these back and forth rides. Yeah, nah, it's like screw it. I mean, I want to hold IWM to be honest. I mean, I mean, I don't know if whatever happens, but I think it's a pretty good entry since the March of this year. I mean, taken a lot of whipsaws, but I mean, it's doing good. I mean, I would instead of me like sitting and fighting those individual small caps, I'd much rather just own the entire damn thing. I mean, it's decent. Still got little 24% upside. I was up 32, uh, almost like 24. It's a good return. Cannot complain much. The worst case, I gotta close it, and if I'm gonna close it, I'm out. I mean, I would rather um, with the smaller with cutting rates and stuff with small yeah, the worst case is gonna come back down. I'm gonna keep this position as is. I mean, I'll just pick like a couple leaps for next year. I can always do that against the shares. So got you got a lot of flexibility, but doesn't mean that I'm gonna start pumping cash and average here and buy something. No, it just you don't fight the position that hard. And you know me, I'm not a very big fan of adding risk to the trades. I just don't do it. I don't like it either. You know, if the trade is not working in your favor, I mean, screw it. Either you don't like watching losing trade, close the thing. It will be clear overnight, or just don't sit and try to buy here and try to average. No, average are very risky game. If you're wrong, you're wrong. Just why are you fighting that thing? You know, gotta work on the risk management. If you're wrong, it's okay. We're gonna get another one. You have to look at this way. We win most of the trades anyways. So if we give back few, what is gonna happen? Nothing. Nothing is gonna happen. I'll find plenty more trades. Don't worry about that part. One or two trade is not gonna keep me up at nighttime. It means nothing. Losses is gonna come. I can be right most of the time, but I cannot be right every single time. So you gotta give me a little break there. you know? I mean, I shared that whatever last logbook with you guys. You can see it how we did this year. I mean, I haven't taken any crazy losses. Few here there. It's fine. We're gonna overcome it. It's a part of the game. I'll find it. I'll find plenty more trade. I'm in a trade and I'm always watching a bunch of other trades. So they just gotta has to line up to a certain level and then I'll just pull the trigger. I just showed you Tesla how we took a trade on us, just a swing trade. Um, I gotta wait. I'm not gonna do anything to it, just gonna leave the way it is to see if we can recover a little bit from here. Try to kind of like move a little bit more sideways if we can. I hope we can try to hold this if we can. So there's nothing for me to do here until this invalidates. If it invalidates, and then I just gotta have to go back to the all the way back here to the 2022 lows and recount the whole thing, and then I will see how that thing will turn out. Um, Qs. I mean, I'm not worried about this dip. I mean, it's not like we have so many of them here. Bigger picture hasn't changed at all. Okay, it remains the same. So I'm not, there's nothing here. There's nothing here I can do anyways for the next several months or so. Is this a matter of are we gonna consolidate here or what are we gonna do here? I don't know. But I'm just gonna show you something that a little bit interesting to me, but this is a bigger picture of a Qs, wave one, wave two, up and three, up and down and four. And then from here, we're just trying to see if we can complete 5 wave sequence, 5 waves to complete one large degree. I mean, go right here. So Can this be a 5 wave? I mean, this is this is almost, you see, this is a measured move. This is where the skews are finding resistance right now. That's 100%. What's the high here? That's gonna be 515. It's very, very close to this 100, which is good. I don't know. I mean, are we due for a pullback in a wave four? We're gonna find out if the profit taking comes into a play into a year end. Well, I don't know how steep are we gonna be looking at, but we have a higher monthly bar anyways for this month, so we should be okay. Um, we're right there. This 514 mark is where we just backed off. Um, which is this third wave. Okay. The third wave, 61.6, is this. 100% relationship is 514, meaning that distance travel here in wave one is exactly the same distance travel here to a 100%. So they call 3 versus 1. So we're good. Now, what I wanted to show you is this. Look what the price, this was the decline. This was the largest correction the Qs had this year. Okay. So, which was 15.90, call it 16% to August lows. It's the largest correction of this year was 15%. It's a pretty healthy one because you have 5 is the normal correction, right? And then you have 10 right there. 10 is a second, call it as a, 5 and 10. 15 is pretty steep one. Okay. 15s are, and then 20 basically starts a bear market. Remember that 20% is the threshold for a bear market. Okay. So you have 5 and 10 and a 15, which is third 15 is a pretty steep one. It's considered as correction. Now, if you're gonna stretch and come down to 20, and that will start the official bear market. That's the threshold for a bear market is 20%. Now, the what I was wanted to show you is this. So we took this dip, right? And then from here until here, okay, right here, that we break this high, right there, which was this 503. Now the point is that we just barely spent any time or price after breaking this 16% decline, and we just fell right back down here. Is that a false break? Is it, but you know, normally price usually spend time going up, but the thing is this, we're just like getting close to the end of the year now, you know? So the melt up that people are talking about is just, if you look at the overall tech right there, all it is doing is just like literally just recovered that 16% dip like this. So you were down 16, and you just went back up 16, right? But the point now is like if you take out the high after this decline, this right there is just kind of not kind of this. This is all you spend time after breaking after recovering everything pretty much back what you lost. Now I'm gonna show you the same thing on S&P. Now watch this one. Now you remember this one, right? And now watch this. You see the difference? Here's the same decline to August low. S&P went up, broke. Well, I mean, it was a hell of a. This was crazy. Look what it did. It broke above here, back tested exactly to the penny, took off. Another pullback all the way back here toward the support. Big, massive rip. And here we are. You see the difference here compared to what I just showed you on Qs? This is how the price trades when you make a higher high and you uh, come back and retest all that, you know, your previous support, because this is resistance. Why? Because this is where you have your largest percentage decline. So when the price will come back eventually back to that previous high, is going to fight that thing for some time. Because why? Because every time when you have your largest percentage decline on the way back up, that zone right there is gonna have a liquidity sitting. This is gonna fight that zone. Is to see if it can clear it. In this case, you see right there, didn't. Days and days and weeks of chop, but it gives you the leg lower. But you have 5 waves here, so you can look for these entries in a wave 2. That gives you one more attempt right there. That gives you this third wave. I always tell you about this third wave. You need to fit your wave count in that order. That third wave is going to break that double top or your triple top. Those tops, they're always going to get taken out. But those ones, they're always going to get taken out with the third wave. Because third wave is the most powerful wave. It's gonna slice through it. And then you have a back test here, and you see how much time and price you have spent since you broke that take out that high right there. This is not what Q's did. It's not the case here. You see? There's a big difference about two charts if you just look them side by side. Here's your August low right there on Qs. Qs just barely made it almost this month on election rally that we had with the gap up, and we just fell right back down here. Yeah, I mean, S&P is definitely outperforming the everything this year. Something is very kind of odd because Qs are always a high beta ETFs and always going to give you much bigger moves and much higher returns if you look at the overall history. But this year it's just not the case, because you saw how S&P took off, break above that, took out that high, and then how much time and price has been spent ever since. So, I mean, again, the point here is that you got one, two, we need to fit 5 waves here in in this sequence to complete the 5 waves in 5. Why? Because is this that I'm trying to do. This is the same, this is the bigger time frame. That's the bear market low. And then from here, what you're trying to do is from this blue 4 to this blue 5, okay? You need to count 5 waves in there. So it could be a 5 motive waves, it could be a 5 ending diagonal. We don't know a diagonal. I cannot even think about because this move is so directional to the upside. The diagonal is going to have more, like it contracts into some sort of a wedge pattern. Blue 2 is bigger. Oh, on a 1 hour chart, blue 2 is bigger than the green. No. How is it bigger? This one? What is this? Oh, you're talking about, no, it's not. So if this is right there is 4.9, you can compare this one from here or whichever way you want to do it. Slightly, just gotta have to adjust it the right way. I don't know. 3, 2, yeah, it's a little bit bigger. You're right. What a percentage. I mean, the only thing we can do is if this is all of 5. If we make this all of 5, then if I put this 3 here, that makes it shorter, and you have an overlap here with wave 1. I mean, how that thing is going to look, you know? So see if I could. Oh, I have a small, it should be. Hang on for a second. Got a 1, 2, 1, 2. You need gonna be giant 4th wave. Okay, let's see if we can do 2 here. We do 2. Now we need to count 5 here. So small. And this is, you see, a 4th are way bigger. All than you two. You see an overlap. You're not gonna do it. You count from here as a 1, 2, 3, 4, 5. Oh, you can do this. If I would have to match this thing with SMH, I would just keep this thing as a diagonal as well. And then wave 2 here. You know? Could do that. Because the thing is, if you look at from August low, this is just a three-way move. Okay. And wave five cannot be a three-way move. So you need five. Unless we clean this up. So if we do this, you see, you can clearly see that Qs are not trading like this, you know, because this breakout and then this thing right there is larger wave forward. It is totally possible. This four, if that's the case, I mean, oops, that will fit the same scenario with the SMH that I just showed you. Because SMH right now is in this fourth wave right there. So I can see it. You have your wave one from the bear market low. You got your wave two right at 23.6. Here's your third wave. And this is a fourth wave consolidation because fourth is just a sideways move. Okay. If that's the case, I can fit the Qs next to semi side by side. Now, if we do that, well, then I got this one right there going in a 1-2 because this one has is perfect. You see, it's very difficult to match though. They do match sometime that I will able to match them all, but then some weird sell-off is going to happen, or there's some sector is going to show more weakness against the other one, and then you just completely off. And I know that you need to be either as close as possible. You can't run one thing on one side, another thing on the other side. It's just how you think you're gonna, where are you going, first of all, and how are you gonna be able to trade. Market is bullish, market trend is up. You should be looking up. Okay. The market is gonna be bearish, then we're gonna start looking to the downside. So it's not bearish. Now, if you sit in and with thinking like, oh, this is the top, oh, good luck with that. I mean, I don't waste my time for that nonsense that you figure out a top. So if this is the case, if we go with a 1-2, or we just hit this 100% of 511 here. I mean, this was 503, which is what, 7 points shy of 511. And then we took this 16% dip. And now here we are, we're trying to take out this high. Okay. I mean, I could leave it here for the 6, 7 points. It's not the end of the world. Even the fact that I know that is not is 7 points shy of 100. It's super close, but if I have to stretch this thing here, yes, I can say like, yeah, 100% has met here for sure. But you have a pretty huge decline here. So that's the what is going on here. So that's the difference. Now, if you look at a daily, what's going on here? Okay, the wave one, wave two, up in three. Here's your four, and now you need five, right? Now, this is a daily. Now, if we're gonna go to a bigger time frame, this is 2 weeks. It gives you this. So my target on Qs is 700. Just remember that. How we gonna get there and when we gonna get there, I don't know. But I'm just gonna try to see if I can press this thing and get this wave count up to 700. The reason why being for 700 is because if you take the law of 1976, okay, to this wave one, 5 versus 1, 100% relationship is 708. That will be the exact minimum measured move. Okay. So if I move this 5 here, then I have to just recount the entire thing from on a smaller time frame to see if we can fit 5 waves up till here. Okay. That makes the fifth waves very short compared to this in price and time. Keep that thing in mind. The 100% relationship of 708 gets you there by October 11 of 2027. That's just the time projection. That's a long time. But the way the market is ripping, okay, I think we're just gonna get there sooner than that because we're getting because we're moving a third wave. Okay. So you have a time projection, and but you have your ratio sitting up there. So either one will come sooner. See, the top time, the upside times are hard compared to the downside. Downside, I'm really good at it. That would if I count my waves right, I can nail the bottoms, but putting a price tag up on the top with the no, I mean there's a different way I can show you a price, but not this way. Like, Elliot is just because uh, Ralph Elliott, okay, hasn't really spent any time his doing his work with time when it comes to to the with the wave counts. Yeah, they just Elliott wave uses time only as a guideline. There's no any set hard rules set on them. But his principle is all about 5 wave sequence that gives you a 3 wave correction, then it just gives you another 5 wave up. So you just keep repeating that thing over and over again. So Elliott just super fractal. So if we just measure this, let's say we are at 497, the 497 to 708 is 42% upside. Okay. That's a lot, right? So 42% upside, if we look at the data, okay, so you measure this move. Now we go back to the to the data of how much the expected return. No, this one, where the heck is my here? So the Q's 3-year average is almost 7.96 and 5-year average is 19.60. Okay. So if 2027 of October, so we're at what 20, consider just call it 25. So from 25, 26, 27, that is almost roughly 2 years and 10 months. Okay. 2 years and 10 months. That gives you almost again the 3 years annual rate of change is 8%. Okay. So for 8%, that's what we have. So that's how the Qs and SPX and Dow and except for the IWM transports are flat and the semis. I mean, that's your average return. if you can take a good look at these numbers. People are more focused on, but again, the point is like, where do you buy them and how long do you hold them? But when you look at the sectors, and if you look at the performance based on a 3 years is or 5 years, that's what I always have is 3 years is and 5 years you should be able to get a return on your money, anything that you invested in. There's no, I mean, I could pull up 10 years and 15-year chart. I mean, really? It's 10-year positions. There's very few people who does that. Um, 3-year average is just, you know, the bottom line is this, that S&P from the last 50 years, um, okay, has an average return of 10% per year. Average return of 10% per year. So whatever the corrections and the dips, bear market, all gonna average out to that 10% every year. Price is good. You can have your projections to the upside, but you have to study the data as well to see exactly what the market is telling you, like how the market has been performing from the last that many years. That is very important. You can you can sit and fight these waves left and right all day, which is fine. I mean, there's nothing wrong with it. There's nothing I can do here, anyways. All I gotta do is just to sit here and fight this 1 hour wave count for you to see how I can get the sequence going to the upside, you know? So that is this 40% upside. And if I put a price tag with Trump, it's for his presidency. I mean, I see it getting up here right there, the 500 mark. So you basically talking about from 2022 to 700, that's 171% upside, 172. So we just need to fit five here. So now we're gonna go back here is to see if I would go to something like this. This 200 is not coming up here. Something like this. That's the way to do it. That's the way it's gonna go. Now you gotta have to ask yourself a question is how long is it gonna take? Because if the tech gets one more downside bigger than 16%, his entire wave is gonna get changed. This is either, you know, I'm gonna have to look at different ways. You don't want to have your any uh, next decline bigger than your previous previous drawdown. So So you just need to, what's going on here? So we need to see if there's your, that's my, that's how I see it. I mean, that's how I think it's gonna, the reason why I would rather either do this than make this whole damn thing a diagonal, something like this. And then we'll look for this wave two. Now, if I do this, that is gonna match this. So you have a same three-wave decline, which is your largest percentage decline to August low. And then from here, you do 1, 2, 3, 4, 5. And then we can make the same case on Qs by doing this. Because if Qs are keeping us sideways for that long, I mean, tech might just chop around sideways as well. But the other way that I have is a 1, 2, 1, 2 is a little bit more aggressive one because it just shows a pretty strong melt up in the third wave. That's well, because I love third waves. Those are hard to catch, but if you get them, I mean, those are the ones to ride. So you can, if we do this, now here we have an overlap with wave one. That is good. Yeah, we can do this. Here you have a wave three shorter than one. Good. Here's your wave four. Here's your wave five. Shorter than one. So diagonal fits pretty well. In this case here, if I have to just get rid of all the 1, 2, 1, 2 nonsense, I can just keep it like this. Oops. This. This will be the drum train after this. Okay. Then do this. Now, if I do this here, that will be the matches with the now this one in SMH will match. This one right there doesn't give me that. Now you have, let's say you have 1 here, 2 here, and you manage to put a 3 here, and you put 4 here. You don't have an overlap. Leading diagonal and ending diagonal, your fourth wave always overlap your wave one. There's no overlap here. You cannot make this thing on a diagonal either. This one. You see how tricky it is? Once you're gonna see these things side by side. But the main point or the main, like you can move around these ones left and right here, there. But the main important part is that your trend is up. When the trend is up, you ride up. That's all. If we if I make this thing same thing with, let's say if I put this 3 here, okay? If you do that, then we have a problem. 1 here, 2 here, and here's your 3. If you do this 3, now this 3 right there is shorter than 1. Okay, you managed to make this as a 4 because you managed to stay above this 1. and then you made another new higher high. So you can just move this 5 here like this with the shorter 3. Well, you got to overcome that. I mean, the shorter 3, you could you can do that. So you could, because this 59.64 has met here, not here at this high. Here's the thing that I would go with the Qs as a 1-2 and the same 1-2 here is because this weakness I looked at yesterday. Where the heck is my sector? Here. You see technology right there, XLK is pulling back here in a second swing. Right there. What do you think after is going to come after second swing? Third. Oh yeah, that has room. I mean, market has. If my wave count will stop me, I'll find a way of my swing counts. Okay, so I rely on, you guys all know that I rely on swings more than a wave count. I can make a wave count work. Don't get me wrong. I have, you guys know, I've nailed a lot of counts, but the confirmation comes from here. So 1-2, and it's going to be a third up. I know that. The reason why is because it has a failed swing. Once you have a failed swing here into that 200 EMA, get that upside. Remember Bitcoin? I'm always waiting, and it's just, you guys don't know what I do all day. Just to, there's Bitcoin. That's the, this is the trade of the year. I would, you know, that's the trade of the year. I mean, I nailed Bitcoin this year. Just nailed it. Bitcoin is good. It's Bitcoin is fine, but Bitcoin will be eventually will take a breather um in a second swing. But for the swing, as long as, I'll give you the number right there. As long as Bitcoin is above this 76,462 mark, is good. You see the color of the line changed from black to green. Yeah, downswing starts right there, was gonna turn red. So that's your trend confirmation. So it's good, got plenty of room to the upside. But now I have projections again that that could put a bit of a pause on Bitcoin. Keep that thing in mind. So that was 127. So from here to here, because the thing was that this, oops, why it does this? The thing was this, that this high right there, I was like, it's just a matter of time when it's gonna take out. I was like, screw it, just buy something. We'll just wait for it. It just went crazy. And if I would have known that I would have cashed this trade, oh my God. I mean, I would have. Sometimes you just gotta. Yeah, I only put $50,000 in a Coinbase and bottom right there. But if I kind of knew this thing was gonna rip like this, man, I would have can put over $500,000 here easily in Coinbase. Done with this. Oh, I didn't know it was gonna move that fast, to be honest. That would be just
So
so.
you're projecting that the Bitcoin is gonna go down after hitting 95,000?
It's gonna find resistance somewhere. How much you think I'm gonna rip? You wanna make a bubble? It's gonna come down really hard then. If you wanna go up in a little bubble, you wanna
I
die
think
price.
that
It is very, very healthy for price to take a bit of a pause, like something like this, like these swing. You see right there, like 9%, 8.6, like these kind of a pause. This is good. It's very healthy for a trend. Well, Bitcoin shows bigger because it moves like a crazy. See, 9, 6, like these kind of a bit of a setbacks right there that you get on the, like on a trend is a very, very healthy sign. You don't want to go straight up and too fast. That thing is gonna come down hard, you know, especially with the Bitcoin because it's so damn volatile. Yeah, everything is beautiful for the Bitcoin because it's keep ripping and ripping. Yeah, because, well, first of all, here's a November right there, which is from 2012 to 2024. The November is the strongest month of the year. Okay. Now, if we look at Bitcoin for this year, how it's been doing, February was our strongest month. Okay. Based on the seasonality. January didn't play out. February outperformed. March was good. April was underperformed. Look at April was up, average was up. This is perfect. May was really good. Outperformed. June, that was flat here. This is a lot less than the average. Look at this one. August was down. September was down. September went up. You see that you can gamble on seasonality as well, but seasonality does help and it plays out. Now, can you see how we did this year is we had 3, 4, 5, 6, 7. So you have 7 higher bars and we have 4 to the downside compared to 1 based on average. That's how you see it. This is your average since 2012, since the 2014. Based on that monthly performance, based on the average, there's only 1 down month. But this year, you happen to match this one, September with January. You can match them, right? This one and this one look exactly the same, right? But you cannot match these 3. Okay. So seasonality does come work in your favor and sometimes it can bite you. But what I showed you before, like how I got here and why I wanted to go long Bitcoin and to me, because right now the momentum is strong. Okay. Weekly is up, daily is up. Daily will eventually starting to move toward the weakening quadrant. If it does that, it's gonna show a bit of a pause here on a price. But these
Take my
prices,
one.
which but these
I got
prices,
my
which these
one
prices, which you
one.
s- these prices, which you see in here, okay, is this is a 127 extension. We hit that. This is 1 point. This is 161.8. We already reached that. This is that 200% of 95. So if we're gonna hit that 200, I mean, the next I can open up is 261.8. So we can do that. So it's fine. I mean, Everybody's talking about 100 mark. Is this is when everybody has $100,000 price target. And that's when you don't see $100,000 price target. That's when market is gonna tease you. It's gonna take you to that 95, 96-ish kind of area, and it's just gonna come back. It just doesn't, it's just the way it is. This is when everybody chase a one certain number. It's just you don't go and hit that number. You can, but your odds are pretty. It's like same thing on earnings. Like everybody is bullish on Nvidia, and then the Nvidia stock is not gonna move. You know, it's the same thing with all the other noise out there. So I mean, we're super close. I mean, but this 161.8 to 200%. And I know that if I would count this as a 1-2-1-2 count to the upside, is just where the third wave is going to start to take a bit of a pause. Now, I wouldn't, because December right there as is good, but we don't have nothing here until we finish November. So December is good. It's not as great compared to, I mean, if you would have get something like this, like this higher bar up to this 10 number, that'd be nice. This is and on the low side here. This is actually the same as January right there, based on the performance. So nobody has this. That's a lucky thing. Yeah, nobody has this. When people ask me like, where do you get all these charts? I was like, yeah, just dream of them. They just come to me every night. um, okay, I think I'm just gonna leave the way it is. I'm not gonna do anything too much. Here's have any dollar we already looked at Qs, Tesla, Bitcoin sectors. We're still working on seasonality. This Qs, SMH. Let's look at some of these monthly charts. I want to just show you the few names that you could probably just to kind of like think. Um, let's look at it because the year is coming to an end, right? So we should look at some of these charts, like how they've been doing for the year to date. Here's Netflix. Take a look at this. Netflix did not have a single down month this year. Look at this. Every single month, this stock makes a new high. Every month. Well, it has been doing it for the last 11 months. I don't know about December. And if you look at this chart, this stock is up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. From the last 13 months, which meaning this over a year, the stock has been making new highs every single month. What is going on here with these? Is there some sort of what, 13 months episode going on Netflix series or something? Or every single month? It's pretty wild, huh? If you really think it this way. No, not a single red bar, meaning that you got to take out one of the lows. There is none. Here's Meta. This month is the only month for Meta that has a lower bar. It's the same story. 1, 2, 3, 4, 5, 6. This is the inside month. 7, 8, 11, 10 months. 10, 11, 12, 13, 14. You see right there from here. Look from this red bar from here. So you have 10 here, 11, 12, 13, 14. After 14 months, it has printed a one lower monthly bar. These are the runs that very lucky, very you have to be super lucky to catch these kind of a moves. You know, it's crazy. Look at Amazon. I'm just gonna show you Mag 7. This. Look at Amazon. Amazon only had one down month, which has taken a little leg lower from this 200 to 150. And then from here, Amazon has been making new highs every single month as well. Okay. Apple. Apple is at a second down month. So Apple started this for first of all, this is very rare for a company, especially for Apple, to be down 4 months in a row. A, the most valuable company in the world. Okay, just like being like S&P 500. S&P 500 down for 4 months, lowered the boat. You know, it doesn't happen that often. This is why I bought those March position I opened, I believe in March, something like that. Then I bought Apple. I wasn't even going to buy Apple. I just bought it just on a separate account. I have plenty of shares of Apple. I'm not worried about it. Yeah, bottom here somewhere. I don't know what the entry is. It's on the sheet. Just let it go up. Be fine. So this is Apple. Did we look at Microsoft? Microsoft is, see, horrible, horrible year for my Microsoft. Look what the Microsoft is doing all year. Has done anything. Higher bar, 3 bars down, two up, down, faded, down, sideways, inside month, last month, lower bar for this month. You see? It's just Microsoft is just consolidating all year after last year run. Just went sideways. It's a very important stock, as you all know that. So what do you think the Microsoft would do from here? Not bad, is to the upside. It's just 1 year of consolidation. You think it's going to go for another year sideways? I don't think so. Um, so we looked at Netflix, we looked at Amazon, Apple, Microsoft, Netflix, Meta. Meta and Netflix are just on Google. Google is okay. Google is good. Even the fact that this is a communication stock for the XLC, but then if you looked at the strength of Meta and Google from the last 13, 14 months, I mean, it's crazy to think about it. You know, every single month you buy Netflix is going to make a new high for the last 13 months. And you know that thing's going to stop. How many months? I mean, this huge. I mean, I don't know. I gotta scan and put some, see if what are the most it could run ever before something that has been known or whatever. But Google is good because Google took this dip here. But you know, the point is, I just want you to pay attention to this, okay? Bottom line is this, that these companies here always gonna be, they're gonna be fine. So you should never ever panic, okay, or get a heart attack over these stocks when they start to come down. I just showed you, like, when you start looking at a bigger picture, it's just gonna change your thinking. It's just the way you're gonna say, like, you know what, screw it. I mean, depends. I mean, hey, Meta was $80, 80, $85 stock. It's over $1 trillion market cap company now. Kicked myself not to buy anything that time. It's amazing. 13, 14 months of straight run to the upside. Holy moly. We would have, if we would have bought 100 call on a Meta for this December of this year, from last year, imagine what that call would worth right now. One or two calls from price was at 85 and you just bought 1 year out calls for $100, 100 price, 100 calls. Now the price of 554. So all you need is one giant trade. It can it will boost your account capital. Like I've done, I don't, I was very aggressive before when it comes to trading and stuff. Like, I was trading like a crazy. I just kind of slow down. I don't know. Kind of slow down a little bit, I don't trade like crazy like how I used to. Forex days are my wild days, and just more and more I just get to understand and spend time and learn about this market, and more kind of like that it that shorter period on any price action is all noise. That's how I see it. The big money gets made on a bigger time frame. That's just a proven fact, you know? And that bigger time frame is where Elliott works the best. So that is the most powerful tool that I have in my hand. I know how Elliott works.
So next year, next Microsoft,
I
and
would,
Meta
oh
is
yeah,
great.
of course. I mean, look at the entire year that we've been going. Like how this is why I wanted to show you some of these things that you could have have a mindset for what to look in Mag 7 for next year, because if the stock has consolidated, especially Microsoft is a giant company, you all know that. If Microsoft has went literally sideways for this year, okay? Look at this. I mean, okay, let's do this. So this is the low, the close, 13%. And Microsoft managed to rally 27% this year from peak to trough. So right now it's at 13. It's just not doing anything because it's a sideways consolidation. After, let's look at a couple more years back. Got a big run here, dip here, got a full reversal here. And can we expect more continuation? I think so. Here is up here, you see. That's the steady run, back to back. Here, this run, this run, this. Here's your 2022, the when the market sold off. So it came back, retest the prior low of the previous year of 2021. And then from here, but Microsoft, any dip should, well, I own Microsoft. I'll see. I'll open Microsoft. I have Apple that I want to keep anyway, so I'm not gonna get rid of Apple stock. I will add Microsoft with Apple for next year. So I will have those two. And I'm looking at a couple more other charts, other stocks. So we're gonna add few. I freed up almost, I don't know, 20, 40, 26, $29,000 yesterday. So I'm just trying to bring the number back to close to 100 if possible for next year again to run a new sheet, you know?
So more question about Apple. Apple is going to have a headwind with a tariff war with China. So how is it going to affect your thesis that Apple is going to hit 350 by May next year?
Look, Apple upside, okay, this is this year. This is the second year. And look what the Apple has been doing the last 2 years. It's just doing sideways. Now it's trying to gain, trying to get to the upside. I look at this move. And went sideways for 2 years. I mean, it could have another side years. I mean, we don't know that. But the point is like a company, Apple, can take a hit. It's gonna bounce right back up because this is a stock that every portfolio, the hedge fund people out there owns it in their portfolio. Apple and Microsoft. Dividend play, and it pays dividend. I mean, yeah, I mean, it's a big name. Apple can just buy their own stock. That's what they've been doing. They're they have that much cash that they will never run out of cash. You know, this is this is not a stock. This is like a tragedy bond. 3 years, Apple's gonna pay the return one way or another. I'm not. We're not gonna sell Apple. What is the entry that I have? Which I bought it from you guys. The hang on. 171.45. That's the entry that I took. Somewhere around here. 171.45, right there. That's the entry of Apple of this year from when did I open this? March. The reason why I bought it here is when I looked at this 4 months, I was like, there's no way. I was like, oh, that's it, time to go long Apple here. You know, this is not common for a stock like this. 3 months rip, 4 months monster. Like, look at that. Look at the size of this bar compared to this. Look at this. One, two, three, four. This was five. Got the rip. And these stocks don't like Microsoft, Apple, Amazon, Google. These stocks don't stay down for like 3, 4 months in a row. It's very, very rare for these stocks to be down for that long. 3 months is one quarter. Think about it for a second. So meaning the stock is puking for 3 months in a row. What has they have done so wrong? For the stock to be punished that bad. This is when AI was booming, remember? And Apple wasn't really part of the AI. That's when the NVIDIA took off. But Apple was just not showing anything until late after that. Apple was now like, okay, yeah, we're gonna put AI, Chat GDP, whatever, into a new phone now. They were late to the party, but to catch up. Um, okay, let me gonna stop this recording and we're pretty much done. Okay, stop this. Okay, stop recording.